Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Anucauskas. Today's the 13th of February 2019. So welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a look at the markets, a few charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then everyone, let's quickly jump into the charts. Now the first one I want to touch on here is the Dow Jones. Now I was looking at this one in one of my previous videos, or to be more precise, in yesterday's Traders Tea Time. So basically here I was telling you guys to keep a close eye on this 25,440 level. So yesterday you can see that the index managed to travel all the way towards that area here and managed to close just slightly below that level. Still looking at the cash index right now, we can see that we will have probably a nice opening gap here, because it is trading currently higher. It is about something like not a full 100 points higher right now. So above the yesterday's closing price, of course, and this of course creates a positive outlook, and we could continue pushing further here towards some next key areas of resistance. So the first one that we're going to be looking at is going to be the 25,800 level. Slightly above that we do have the 25,965 area, approximately there. It's marked near the highs of the 3rd of December. Of course, keep your eyes on the psychological 26,000 itself, so just a few points higher than that. But again, for now guys, the first area that we're going to be keeping a close eye on is going to be the 25,800 level. So let's see if it actually reaches that today. If this suddenly decides to drop below the 25,440 level, and just to kind of remind you guys, I mean, like I said, just to refresh you that that we are looking at the cash index right now. We are trading above this 25,440 level. So that's what I'm saying. If we were going to get a nice drop below the 25,440 level again, then yep, this is where the bulls should be start being a little bit more on the cautious side, and we could see maybe a slide lower here, maybe even actually going back towards the psychological 25,000 level again, or a little bit lower towards the 24,840 zone. As you can see that in the past it acted as a good area of support, both support and resistance. So we'll keep an eye on that one, but for now it seems to be that the index seems to be looking more bullish than bearish. So let's see how this plays out. But again, like I said, for now we're going to be aiming for the 25,800 level first. We're just going to go step by step, and yep, let's see how today's trading session is going to end. Jumping into another index, but this time it's a dollar index, and looking at this DXY here. But actually, let me just jump into a 4-hour chart just to kind of show you the overall picture of what's happening here right now. So of course, you know, after breaking this short-term steep upside support line yesterday, the index traveled lower, managed to reach the 96.68 level approximately there, but actually found good support just slightly lower, around the 96.64. so from which you can see the index rebounded and now it's pushing higher. So in a way we actually can adjust a few levels here right now. So just kind of mark this key area of support around the 96.64. so this is where we're going to be targeting as right now as well, if this decides to reverse back down, because for now, until we kind of remain below this below this upside support line, this could be seen just as a correction, and in other words, if this fails to drive back above the 97.10 level, now this is where it could become interesting, because we might be seeing something like a double top here, and we could see maybe the bears jumping in here and potentially driving this this index back down again. So in a way, for those who are more on the cautious side, in order to kind of consider the downside, you could in a way wait until this drops below the 96.64 level first, and then you could aim for levels like the 96.40 or even actually the 96 level itself. But for now, guys, I mean, yep, it is kind of trying to push higher right now. It failed to reach the R1. Still, the day is not finished, so we could see that getting hit today as well. So for now, guys, on the upside here, in order to kind of consider a further move higher here, we need to see a nice good close of the daily candle, specifically of the daily candle above this 97.10 level. So if this gets a nice break here, it could confirm a forthcoming higher high, and we could see then maybe a possible test of the 97.54 zone. So, and just to kind of remind you what that level was here in the past, here it acted as a very good area of resistance here back on the 28th of November and also on the 11th of December. So it kind of held the price nicely lower. So that's why, guys, for now, basically we need to see a nice good push above the 97.10. This, like I said, could confirm a forthcoming higher high, and also at the same time automatically would place the price back above this short-term upside support line. So basically, that's why this level becomes for us quite an important one to watch. If it fails to kind of remain and close the daily candle above this line, then watch out. We could see maybe another leg of selling here. But then again, like I'll repeat myself, for a better confirmation of the downside, we would need to see a drop below this this low right here at around 96.64 level, and then we could then target slightly lower levels, the ones that I've mentioned earlier. Jumping into Bitcoin now, this is a bit of a drag. Certainly last Friday, it sparked some hope among in the bull block, and among the Bitcoin enthusiasts, let's put it that way. So for now, you can see that it's kind of flagging out right now, and we could see maybe another push higher. But again, we've seen similar situations where it was flagging out, but actually then still eventually broke down to the downside. So that's why we're going to try to play it safe here, and we're going to wait for a nice pop above the 3,745 level first, or in a way you could round it up towards the 50. So the 3,750 level, and that could be that gateway towards higher levels if it gets broken, of course, if that level gets broken. And the one that I'm watching here, the Bitcoin that I'm watching here, that's from the Bitfinex exchange. So you might have a slightly different price, but in overall basically you could in a way watch these highs, these recent highs that we had here in the beginning of the week and over the weekend as well. So that's why, guys, keep an eye on this. On my chart here is the 3,750 level. This is where I'm going to be looking for a possible move higher. This is when I'm going to consider a possible move higher if we're going to see a nice good pop above this level. On the downside, well, if this suddenly drops below the 3,580 zone, well, it could potentially get back into this little range that the crypto was trading in, and this range I'm talking about is between the 3,420 level on the downside and the aforementioned the 3,580 zone. So you can see that back here between the 28th of January and the 8th of February, it kind of can maintain the price action within this, between these two levels. So that's why, guys, if this decides to drop back down below this 3,580 level, then yep, we could potentially start targeting this lower side of the previous range here. But for now, guys, it's stuck here. It's stuck. Looking at this 4-hour chart, it's stuck near all of it, near its 200 EMA and the 21 EMA. So in a way, for the upside, we need to see a nice good pop above the 3,745 or 50 level, approximately there, and then we could target higher levels. Jumping into a few pairs now. So the USDJPY. Now this one is very interesting. I was covering this this pair a few videos ago, actually. I believe that was on Monday. Basically, I was telling you guys to keep a close eye on this 110 level, and from which you can see that it had a nice pop here to the upside, and now it's testing this other key resistance area near the 110.85 level. Now, also, I've mentioned that area because it was seen here as a nice area of support back on the 20th of December. Certainly, don't get me wrong, it was violated here around the end of December, but still, you can see that we can see that there's a temporary hold up near this area, near this 110.85. Now, of course, the other level that we're keeping a close eye on is the 111.45 zone. So, and that was marked by the high of the 26th of December. So very important level this one becomes. Certainly for now, like I said, is currently balancing around the 110.85. Let's see what it wants to do further. For now, we are still bullish. We could, like I said, see another push higher, but don't forget that we may see a bit of a correction back down as well. And in terms of trying to find where it could correct to, if we draw this little short-term upside support line here from the low of the 31st of January, and this is where you can potentially look for a possible rebound. If it fails to drop below this upside support line, this is where the bulls could start coming in again and driving this pair higher. So that's of course in the scenario if we would see a pullback right now. Yep, and this, like I said, this is the area that we're going to be keeping a close eye on, around this upside support line. If this suddenly drops below this upside support line, now of course for us, let's say, to get comfortable with the downside, we would probably need to wait until this gets back below the 110 level again, and if we do see such a move, then yep, we will target these previous lows, like the 109.50 or even the 109.10 level, which is which acted as a nice area of support here back on the 28th of January and also the 22nd of January. So for now, guys, long story short, it is still bullish, but again, if we would see another push higher here soon, then probably expect maybe a bit of a correction back down. And like I said, if this even decides to drop all the way here lower, all the way here towards this upside support line, keep your eyes on that one, because if it continues to hold, this could be a nice good entry point for the bulls again, and we could see this one maybe traveling much further into the upside. And the last pair I wanted to quickly touch on, and that's euro dollar. Now the euro dollar here is a bit of a mess here, and I was talking about this pair yesterday basically, and I was telling you guys to keep a close eye on these in a way tentative upside support lines, but you can see kind of they still kind of play out nicely. So this one right here that got kind of violated, in a way we actually can get rid of it right now, because still for us the more important one is this one that's that yes has been violated here back on the 24th of January, but still you can see that kind of it continued to play out nicely. So even if this decides to reverse here and moves higher, this is of course this is the line that we're going to be keeping a close eye on, because this is where the holdup could occur. But for now, to be honest, it doesn't seem that it really wants to travel back up. For us to get comfortable with the downside, with more downside, we need to wait until we get a nice drop here below the 1.1270 level, and this way we could then target the 112.15. And just to kind of remind you that the 112.15 level was marked here by the low, the lowest point of November last year. So But again, for now, we're kind of more in the neutral spot here, because like I said, it might reverse again and push higher. This is, of course, we will target these recent highs near the 113.40, but for now you can see that the direction is to the downside. It's currently trading below the pivot, so you have to keep your eyes on the 112.70. If this decides to break this, then well, I mean, this is not looking good for the euro dollar, because it could continue sliding further. And like I said, it does have some good areas for a potential test, like the 112.15, which is the lowest point of November, and just slightly above that we do have the 112.25 zone. I do understand it's only about 10 pips higher, but nevertheless, keep your eyes on that one as well, because that was marked by the low of the 13th of November. So keep your eyes on that one, guys. Let's see what happens for us. Let's say to turn bullish on this one, well, we would need to see initially, of course, we would need to see this one traveling back above the 113.40 level, but for better confirmation, probably we would stick around and wait until we see a nice good pop above the 114 zone. So this could be that that gateway towards much higher levels. Okay, guys, I hope you found it useful, and thank you very much for watching and listening. If you want to join me tomorrow morning at my Trader's Espresso, and that's, as always, 7 o'clock GMT time. But for now, I hope you have a wonderful evening for those who are finished for today. For those who are still planning to trade the US session, yep, be very cautious, be very careful, and yep, I'll see you tomorrow. Bye-bye.